So did you know that there are over 700 different dividend stocks that have raised their dividend for at least 5 consecutive years? And of those 700, 49 of them are trading right next to their 52-week low. And the craziest statistic yet, and of those 49, 4 of them, just 4 of them, have revenue growth and dividend growth rates that exceed inflation. So, what are these 4 companies? What's up, you guys? Welcome back to the Average Joe Investor channel. So like I said before, this spreadsheet, the November 2024 dividend stock spreadsheet that I create every month, tracks all the companies that have been raising their dividend every single year for at least 5 consecutive years. So it doesn't include companies that have cut their dividend recently within the past 5 years, or companies that have held their dividend exactly the same. Now, of those over 700 companies that I just mentioned, only 49 of them are trading near their 52-week low. Now, ordinarily, when you think of a company that's trading near their 52-week low, especially within the context right now of many companies trading near their 52-week highs, you might be thinking to yourself, wait a minute, Joe, isn't this a sign that companies are in bad shape? You might say that, except for revenue growth is a strong indicator of businesses doing well, and dividend growth rate shows staying power with a dividend stock. So in this spreadsheet, we'll look at column K here. We're going to sort these by the green shading, which shows that they're trading within 5% of their 52-week low. You can see that right here, these prices in column K compared to column M right here. And furthermore, if we look at the revenue growth in O, P, Q, and R right here over the past 1, 3, 5, and 10 years, as well as the 1, 3, and 5-year dividend growth rates in columns S, T, and U, you're left with these 4 companies right here. So let's talk about them one at a time. The first stock we're going to look at here is Capital Southwest Corporation, ticker symbol CSWC. Now, for full awareness here, this is what's known as a business development company, or BDC for short. It's a special type of company where they are mandated to pay out 90% of their earnings to their shareholders, and that gives them favorable tax treatment. So very similar to real estate investment trusts, they're very heavy on cash flow to investors. As it states on their website, Capital Southwest is an internally managed, credit-focused business development company actively providing flexible capital to lower middle market companies across the capital structure. Here are some of the investments in their portfolio currently. Companies like Gastro, Summer Discovery, Insure Homes, Re-Roof Partners, Command Medical Products, Kids Care Dental and Orthodontics, there's one I've heard of, Jackson Hewitt Tax Services, and more. Okay, so here's a look at Capital Southwest Corporation in the spreadsheet. 9 consecutive years of raising their dividend every single year. Their current price is right around $22.88 per share as of November 18th, and you can see it's very close to their 52-week low of $22.01. Here's those revenue numbers right here. 37 or 38, 45, 37, and 33% revenue growth over the past 1, 3, 5, and 10 years. Those are amazing numbers. And then the dividend growth right here, 6, 10, and 8 over the past 1, 3, and 5 years. These are solid numbers that are absolutely outpacing inflation. Here's that dividend yield currently, 10.14%, which is outpacing the average 5-year dividend yield over the past 5 years of only 9.64%. So you're getting it on an even bigger discount than normal. I wouldn't pay as much attention to the payout ratio here over the past trailing 12 months and year, because with BDCs, these numbers don't quite align with a normal company. Now, this video is not designed to be an in-depth review of each of these individual stocks, but really a starting point, a platform for you to jump off and look even deeper, above and beyond the metrics we're talking about in this video. So furthermore, let's take a look at what other people are talking about with respect to this company. Here's a look at the Seeking Alpha website right here. You look at the summary. I always try to check here when I'm looking at a company if I can't find anything particular on Google with respect to recent news. And really what we're seeing here is, hey, buy the dip. It's a strong BDC. Is it a mediocre quarter? Don't ignore the growth, etc., which is what we're seeing in revenue as well. So nothing here that I'm seeing with respect to analysis or news that says this is a warning sign for this company. Here's a look at just a Google search of news related to this company. You can see here, nothing significant or structural for the company. Again, this is not designed as a deep dive of this company. I would encourage you always to do your due diligence if you're thinking about investing in this company. It's just really to make you aware of the types of companies that might be hidden gems of value given their current price per share. Okay, the second company we're going to take a look at here is Alexandria Real Estate Equities Incorporated, ticker symbol ARE. This is a real estate investment trust with 14 consecutive years of raising their dividend. Alexandria is a REIT that has a very unique purpose and strategy with their investments. Okay, so it's a REIT, so it actually invests in real estate. Here's a look geographically of where these centers are located. You've got some in Seattle, San Francisco Bay Area, San Diego, here in North Carolina, the Research Triangle. We've got Maryland, New York City, and greater Boston area. And if we scroll over here, we can see that they've got, like I said, 14 consecutive years of raising their dividend every single year, which is great, and priced very close to their 52-week low of 102.24 at 105.58, give or take. Then we've got their revenue growth right here for over the past 1, 3, 5, and 10 years, growing at 9.56, 14, 16, and 16%, so very solid growth there. And then the dividend growth rate at 4, 5, 5, and 6. Then we have that dividend yield at 4.93% against a historical 5-year average yield of 3.50%, which is effectively a 41% discount. And if you're looking at the payout ratio based on free cash flow, we're at only 56% over the trailing 12 months, as well as over the past year. And again, looking at some of the analyst and news related to ARE, we can see here buying the dip, we've got reinforcing the bullish view. We have nothing here that says, hey, this is a really big concern, or hey, this dividend is going to be cut. And then also a news search based on Google as well. Nothing significant here that says, hey, I need to be really concerned. So again, this doesn't mean go out and buy this stock today. It means, hey, here's a stock that might have a ton of value, and if you're already a dividend stock investor, this might be a good fit. All right, third stock on the list here we're going to talk about is Rexford Industrial Realty Inc., ticker symbol REXR. This is another real estate investment trust, and they've been raising their dividend now for 11 consecutive years. Here's a look at their website. As you can see on the screen, it's a real estate investment trust that focuses on industrial properties in the Southern California area. They buy industrial property throughout Southern California, stabilized, leased property or vacant, value add property. You can see some of the properties here that they've invested in the Southern California area. And as you can see on the map, this is California, and this is exactly where they focus. If we zoom in here, you can see that the properties are all throughout Southern California. Down here in San Diego, yes, but primarily I would say in the Los Angeles area right here. As of November 18th, their price per share was $42.01, which is very close to their 52-week low of $41.16 and very far away from their 52-week high of $58 per share. Their revenue growth is really solid at 18, 30, 29, and 31% over the past 1, 3, and 5 years. And here's their 1, 3, 5, and 10-year dividend growth rates here, all over double digits, which is both on revenue and dividend growth rates exceeding the historical inflation rates. Their current dividend yield is much higher than their historical yield at 3.98% currently against historically only 2.39%, or effectively a 66% discount relative to the dividend yield. When taking a look at what other people are saying about this real estate investment trust, you can see here, hey, high yield, undervaluation, make it a top real estate investment trust pick, dividend powerhouse, great opportunity to buy the dip, upside potential remains, a top read on my radar, etc. And from a Google News standpoint, we're not seeing anything significant here that would cause concern. Last stock to take a look at here is Huntington Ingalls Industries Inc., ticker symbol HII. Now, my guess is for the average Joe out there, including myself prior to this video, you probably had no idea what this company does, and I bet you it might shock you. They build ships for the Navy. You can see aircraft carriers, amphibious ships, artificial intelligence, national security, etc. Which on its face is just really, really cool. So this industrial stock here has been paying and increasing their dividend now for 12 consecutive years, and their current price per share is right around $193.56, which is very close to their 52-week low of $184 and far away from their 52-week high of $299.50. We see revenue growth that's very stable at 8, 7, 6, and 5 over the past 1, 3, 5, and 10 years. And then 1, 3, 5, and 10-year dividend growth rates here at 4, 4, 8, and 20%. So we see a little bit more stability happening, or stabilization really, occurring for the dividend growth rate, but still beating inflation. Current dividend yield is 2.69% against a historical yield of 2.37%. So still a discount here, but not quite as high of a yield as the other companies. Here's that payout ratio based on free cash flow over the trailing 12 months. And over the past year at 61 and 57%. Now, when looking at Google News, if you scroll down a little bit here, you do see shareholders' rights advocates investigate this company regarding possible securities fraud violations. So that could be one of the reasons why we're seeing lower prices here. That's 2 days ago. And here on Yahoo Finance, here's why Huntington Ingalls Industries is one of the best positioned defense companies. We'll see if this, again, here's another article regarding investigation into fraud. So we'll have to keep an eye on this right here. But if we're buying at 52-week lows, might be a unique opportunity here. Now, none of the articles here on Seeking Alpha are dated after that news regarding the securities fraud allegations. So something to keep in mind. We're still seeing only positive things here on Seeking Alpha. Once again, guys, this video is not designed to say, hey, go out and buy these 4 companies. Please do your own due diligence. dividends, take a look deeper, see if this is a company that you think has a positive outlook for the future. I do think that there are some unique opportunities here, but make sure you do your own due diligence. If you want to get access to this spreadsheet in particular for dividend stocks, or any of the spreadsheets I use on the channel, make sure to check out the Average Joe Investor Patreon community. There's a link down in the description below. As a reminder, guys, I'm now on the X platform, so if you want unfiltered, unique takes from me related to dividend stocks, of course, but also related to selling options, creating income, financial planning, financial literacy, check out the link down in the description below.